I'll start with that. From gamblers to investors. Speaking of gambling, just a breaking news came out that Theresa May would face no vote confidence, so that means general elections here in the United Kingdom. Yeah. How many of you actually support Brexit? Just for a matter of fact. Okay. Well, let's see. So to start with, thank you for attending the conference and taking the time out. A little bit intro about all of us, for those of you who don't know. I come from investment banking background. I've worked as a hedge fund trader for BNY, Bank of New York Mellon, and for Bank of America. For the last 2 years, I've been working as a chief market analyst for an investment firm based in London, and I hold a position of columnist with Forbes. So that involved me traveling around the globe, and in this particular year, I've done 89 conferences. Still, I believe, I know the Celsius people are laughing, smiling because we see each other all the time. I still believe that there's a huge amount of knowledge that I still need to learn in this space. And in order to do that, I'm starting a PhD in blockchain and in asset tokenization in Q1 of 2019 over in England. That's all about me, so over to you. So please introduce yourself, a brief history, where you are on the stage and how you got to where you are.
Okay, hi everyone. I'm Yael Tamar. I'm the founder of Top of Blockchain. We help blockchain companies go mainstream and mainstream companies go blockchain with the right go-to-market strategy and all the tools that they need. So my background is I'm an executive in the marketing space, communications and PR. I've been doing that for a public company in the communications, in the telecommunications space, as well as green energy and a financial group that included private equity and real estate and just any pension fund and financial asset you can find for many years, and then been an entrepreneur for the last 5 or 7 years, creating startups in the fintech space. And 2 years ago, I discovered the possibility of the world going blockchain, and here I am. So now I work with Top of Blockchain as well as Silver Castle, which is a digital crypto asset management fund in Israel. And thank you all for coming to see our panel.
Good morning. My name is Pavel. I'm from London as well. And it's actually good news.
I agree.
Yes. I come from financial backgrounds. In the past, I ran 2 payment systems similar to PayPal, slightly smaller. One of them was the largest payment system once in Eastern Europe. After exiting successfully from that company, I started in blockchain very early, around 2014. And my first company, which still exists, was in supply chain verification. And we worked with some major brands in Europe. And recently I also started investing in the space industry, and we did a couple of interesting investment in that space. And actually our ultimate goal is to tokenize the space industry and make it more accessible for investments for general population. Thank you very much.
Hi, Robert Cohen, Benson Oak Ventures. I live in Israel, been here 7 years. I'm from Philadelphia originally. Met a few people yesterday at the party from Philly, so that was good to see. I've been investing as a venture investor for about 20 years now. Israel the last 7 years. I lived in Prague for many years, was investing there. And mainly I've been focused on investing in brands, B2C. Our new fund, Benson Oak Ventures, focuses on platforms. Which for me is all about the direct transaction model that the new Web 3.0 is going to unleash. I don't say I invest in blockchain companies, because I don't think that's really a phrase. I invest in companies which potentially use blockchain as technology to help them scale faster and to unleash some of these direct transaction models. And I look at crypto as a gamification layer to help incentivize and reward a community and build these assets much faster.
Hello everyone, good morning. I'm Gianluca Massini Rosati, I'm the CEO of Scriba, and I'm Italian. I've been an entrepreneur for the last more than 15 years, and my main company is in the accountancy business. I have a quite large accountancy firm in Italy with more than 2,500 clients, and last year we started to develop an AI to record automatically the accounts into the blockchain as well. So we are working with traditional companies and also with crypto companies to record their accounts, and we use the blockchain as a database to also to create in the future a trust ranking where we can certify the information. So in the blockchain you can do that, and you can use this kind of information also to create trust ranking and to ask for loans, as the information there will be self-certified by the blockchain itself. We started this business because we were scaling too fast, so we needed too many people to manage the accounts, and thanks to the AI, we can now save more than 70% of time in all the data entry process that happens in our offices. And thanks to this AI, we can also provide a digital CFO for small and medium enterprises that probably cannot afford to pay a human CFO. So our AI, Scriba, can be also a CFO for small and medium enterprises to analyze and create data-rich reports based on the accounts in the blockchain.
So you could really see that how this AI and blockchain industry is moving in the next few years. So discussing the major topic, the main topic, from gamblers to investors, how many of you actually have bought Bitcoin in the last few months or a few weeks? Anyone?
I've done it.
I bought it 2 weeks ago. I bought it, and as we were discussing earlier, the reason that I bought Bitcoin is because in my own portfolio I hold more Ethereum. So in order to balance that, I thought that this is a good price for me. At the same time, I think that the downside is very much limited when it comes to Ethereum because it's trading in around $80, right? But having said all of this, Gianluca, I wanted to start with you. Ethereum, there's a still huge use case based on that. But your token, or many other companies like you, who are actually onboarding clients, as you said earlier, are being hit because of gamblers being on the market, because they're just pushing the prices down. When you look at the CFTC data for Bitcoin, and then you can clearly see. How are you battling with this?
Let me start with the meaning of investor, because an investor is somebody that invests in something, and a professional investor invests in general in companies, in stock market, in commodities. In the stock market, in commodities market, you can analyze trends, you can study, you can make decisions based on history, and you can also diversify your investment, because in commodities market you can buy oil, gas, gold, coffee, sugar, and in this way you can diversify, and you can also balance your portfolio, remaining neutral against the market. But in the crypto you cannot, because if you buy Bitcoin, Ether, or XRA, or EOS, or whatever it is, you're not diversifying anything, because the price of the cryptocurrencies are closely correlated, and when the Bitcoin falls, all the other coin and tokens falls down. And you can see also on the Ether, but also I can speak also about my project. I'm sorry if I mention my company, Scriba, and our token XRA. If you have a look at the market, we have fallen from 0.06 to 0.025 US dollars, even though we are onboarding hundreds of clients and they are buying our services. And it's because of the speculation against Ethereum, and because our project is linked with Ethereum. So probably we are investing in crypto, we are gamblers and speculators, we are not investors, because we are not managing risk, we cannot diversify, we cannot control our investment.
It's a very good point, but it's very difficult to say what is the reference point for success of blockchain or blockchain-related companies as well. And maybe prices were high in the first instance, so they're falling. And I understand there is a lot of speculation going on and prices have been pushed downwards, but actually we have to think about what is the real life world implications of Ethereum and how it's been used, what projects have been built on it, and then look at other tokens as well. What do they do? And we have to find that kind of a referencing point, and then we'll have to use a crystal ball to judge what the market will be in the future, because in the past it was all built around the expectations of people, markets going up, but now market is going down. So do we really want to base our future expectations on some sort of crystal ball scenario? Probably not. We should find a matrix how we're gonna judge the success or failure of certain blockchain and blockchain-related projects, and then apply that so we can establish some sort of investment scenario for the future.
So, in the real world, in the stock market, we used to look at different indicators of whether stocks are undervalued, overvalued, and it's usually based on companies' activity, income, and the world and the market. Now, in the crypto world right now, there's so much speculation. So, like you said, you need a crystal ball to figure out which way it's going to go. So, I think as the market matures and as blockchain projects mature, as more mature companies are going to be issuing, tokens, possibly security tokens, we're going to see a completely different trend in which possibly not all of the crypto assets are going to move in the same direction whenever Bitcoin falls. So that's my crystal ball prediction.
I like what you said about defining investing, because I think it's actually worse than a crystal ball. At least a crystal ball, you take some view of what that crystal ball looked like. I think investing now, both in crypto assets and in other assets and in venture, has become frankly, the greater fool theory. There's going to be someone else who's going to bid this price up and I'm going to be able to sell it. And I think that happens with crypto, where there's no real economic models that anyone has come up with that says why its price is going to be X, Y, and Z, but hey, it's going to go up, and I'm going to profit. And I think that also then became part of the venture investing. I like the title, gambling versus investing. Gambling usually implies a short-term gamble. Investing should not be a gamble, or at least it should be an educated one, where you're investing in something long-term. You're putting in financial capital, operational capital, but even venture capital has become the greater fool theory. I sit at board meetings where we'll spend half the time talking about the company and what it's doing, and the other half will be, how do we raise money from the next person, right? Rather than the team telling me, hey, here's why I'm going to convince you not to let me leave this room, not to just give me more money. I need to figure out why someone else should invest. And I think this is a problem for the entire venture industry, where it's just become, we don't add value to companies, we don't necessarily spend time on them. It's all about raising the next fund, deploying more capital, and getting other people to invest. And to tie it back to the ICO, I think it was a reaction of entrepreneurs to sort of short circuit that entire venture process and go to the end. And I'm going to raise a ton of money, I'm never going to have to talk to any investors, I'm going to be able to do whatever I want, and resulted in a lot of the things that were bad for investors, and actually I think, we'll talk about it later, maybe bad for companies as well, as evidenced by your speculative issues that you're now facing.
It's interesting that you bring in traditional markets in this space, because in Q3 of this year, the word blockchain was literally vanished from the quarterly earnings. In Q1, we saw that word in literally every single company coming up. We are using blockchain as another way of pushing that stock price up, and now it isn't there. Maybe, could it be because we haven't seen the actual adoption of a blockchain technology on a larger scale?
Did the Long Island iced tea go back to Long Island iced tea?
And what do you think about a new term which is coined by some guy, and it's called HTO, hybrid tokens? Do you think that, because you brought it up earlier, you said, okay, so now we are in a very interesting space between ICO to STO. Could HTO would be a next phase where we could see that, okay, ICO has just dropped from this landscape and now moving to HTO and STO?
I'll go there, because I I just say it's just another, what's an abbreviation? It's just another shortcut. So this is just another shortcut to actually doing the hard work of investing in companies and thinking about these things long term for the future. Traditional investing is rolling up your sleeves, putting money in and putting work in. So an HTO, I don't even know what that is. It's
Why am I talking?
I mean, I know what it is. I mean, I don't know what it is. I don't know what it would mean if I saw it. It's just, it's like companies have raised money through stock and through bonds for years. So if you put that together, it's called an HTO. I mean, it's just another form of financing. That's what all these things are. And it's just how companies choose to finance themselves. And I think a lot of companies were put in a position, because investors were throwing money at them, why not, where they could finance themselves with cheap, dumb money, frankly, and I don't think that's sustainable for the future. So I think we need to go back to models that aren't based on shortcuts and acronyms, but just based on what works for the company, what works for a long-term investment that's going to actually create truly disruptive things, because that's the real promise, right? When we're investing and taking enormous risk, we should be rewarded, and that reward comes from companies that are, to sound philosophical, are truly creating game-changing, world-changing disruption, and that's where you make the money, not in the short-term gambling. At least long-term, that's not where you make the money.
Yes, and also as you mentioned, we're probably moving from ACOs to STOs, but we have to make sure that there are safeguards for investors when we get there, especially around the liquidity. I mean, there's very limited liquidity in STO projects at the moment, and obviously platforms like Polymath, they don't really show up lots of liquidity at the moment. But maybe it's a good thing for now, so there is less speculation. We have to get ready and kind of see what would be the real safeguards and protocols for to deal in the future with the security tokens as well. It's kind of important.
I just want to add that yes, it's true that the traditional venture capital investing and smart money investing is probably a better way for companies to generate value in the long term. However, the mere presence of the ICO and the STO and the HTO is just showing us that companies still need more money and they need more, they need more funding to do whatever they want to do, and there might be people who are willing to provide it. So I think the market needs a very stable process that is regulated and that it doesn't look like the Wild West when everybody is creating their own security tokens, for example. You need platforms that are stable enough to produce and support good projects, and then we're going to have a good competitive model to the traditional venture model.
Yeah, I think the same, because I think that one of the biggest problems that we are facing is about the lack of regulation. If we want to bring in this market large investors, institutional investors, we need to rule the market. We need to allow the regulators of each country to create new rules to apply to this market. That is the main thing from my point of view. Also because at the moment we have a lot of exchanges, a lot of decentralized exchange where a lot of people can trade without recognize themselves. So there is a completely lack of KYC process between, for example, in many exchanges. And I think that institutional investors don't want to trade with the people they don't know who they are. There is another thing that avoid the growth of this market.
Sorry, Robert, I have a different question for you.
Yeah, just 10 seconds.
Sure.
I just want to say about the venture. I totally agree about. I just want to clarify. I don't think companies are made mistakes not taking venture money. I think it's more a wake-up call for the venture industry. Why companies actually didn't want to take their money and why they didn't look at it as value-added money, but actually wanted to avoid it. And so I think that's the thing that not just companies, but the venture industry as a whole needs to sort of think about the investing model and what really it's doing in terms of accelerating companies.
So what makes a good company for you? What is a good
company?
Yeah.
I know it when I see it. No. A good company. I boil everything down to 4 questions because I focus on brands and sort of the top of the stack, which is where I think the value will accrue. So for me, it's very simple. It's a huge market that's being disrupted by technical innovation that you have. Second, and the most important question is how will you win? Why will you be the winner of XYZ space? Third is can we add value? If we can't add value, first is part of our mantra to be able to add value to companies, and if we can't add value, we shouldn't invest in the first place. And fourth, which I think is specific to the whole tokens, is there alignment between management and shareholders. If I'm funding your company and your IP and I'm getting tokens that may or may not be worthless while you keep the equity, we're completely unaligned. So, I mean, there's obviously many, many questions that come beneath those four, but those are the main four questions. And about how you will win is not just how you're going to raise the next round. Like, I'm not interested in that. I want how you're going to be the winner 5 years from now. What's your vision and what's your plan to do that, not just figure it out as we, obviously we'll figure it out as you go, but to have a vision of how you will be the winner.
So if a company is coming to you, what exactly are you looking at? Are you looking at the business plan? Are you looking at the token model? Are you looking at what exactly are you looking at in those documents that will really jump out for you as an investor that, okay, look, here is a company, and for X, Y, Z, the way that the business plan is done, we are very interested.
Well, the best way to show that you will win is that people are already giving you money for your service.
But if people are ready to give you service, then they don't need to come to venture capital.
Why?
Why would I come to venture capital who would take huge cut out of my equity? Why can't I just not open up to the floor, to larger, broader investors? That is the entire idea.
For token offerings, for example.
Or STOs, even.
Yeah.
I mean, like right now, securities as well.
If you can raise money cheaper, give less of your company away, then you can do that, of course. I'm not sure that's a sustainable model going forward. Depends on how much money. The main reason you would take venture money is if you could take other cheap money. Again, this is the ICO market happen. I can take cheaper money, so I'll do that. But especially in the token world, for example, and I don't only focus on. In fact, I don't focus on tokens. Tokens for me are an add-on to whatever business we're investing in. But for example, if you have a finite, a lot of companies got into trouble where they raised, an ICO based on a finite number of tokens, because that's what they had to do, because you didn't want to have any, dilution of your token. But then you're stuck. You can't raise any money, both in good and bad times. You have this reserve, and that's all you can do. You can't issue more tokens because you've already written this white paper X months ago that says you can't do that. So I think it's a short-term approach to a long-term game. So I think venture investing is not necessarily it's not a panacea for everything, but for the right investor who can actually bring value and add partnerships and add more money, that's how you're going to build companies. That's how, for 30 years now, since venture was invented as a asset class, that's how companies have grown. It's a traditional way. Google, these companies slogged away for many years. Amazon slogged away for many years. They raised money. They raised more money. They had value-added investors, or theoretically value-added investors, and they built and grew. And when the time was right, they raised more money to accelerate whatever was working. So I think, I do go back to that traditional approach, but as I said, venture needs to examine if it's playing that traditional game correctly, or it's just sort of accentuating some of the problems that then led to this idea that I'm going to raise it from the crowd, it's cheaper and it's better.
But isn't the premise of the utility token was that the future customers are becoming investors in the company? That was before all the gamblers got into the market. I mean, wouldn't that be
go there too? So utility token was trying to do two completely contradictory things, in my opinion. One is a utility token is by definition utility for the ecosystem, so I'm using a token that's going to benefit contributors and consumers of that ecosystem, so there's utility there by definition. But then utility token became this financing thing, and anyone who invested in the utility token winks and nods aside because we don't want to violate any things, are expecting huge appreciation of that token. And no economy can work, as we know, with huge appreciation of its currency. So they became contradictory things, and they should be separated. Utility for the platform, security for the investors.
Okay, so moving away from this one, right now we are sitting in a time frame where we are stuck between the two different jurisdictions, right? And especially with your project, I'm not sure about the project, what exactly the space project is, but I know from the industry, from the last quarter or so, people are not putting money, investors are not interested to look at anything which is an ICO because it's classified as a security or whatever reason, right? Then STO, as you have mentioned, is a liquidity issue, not enough platforms. What is the solution to go and convince investors or to convince anyone in that space that, okay, you have the right product, then you'll be able to succeed in this market?
Well, first of all, I don't believe that we are lacking investors for both HCOs and STOs right now. I've just been on a tour in Asia, and I can tell you that there are many ICOs still happening for good projects. And obviously that's their choice from the regulatory perspective to do ICO or not. But it's happening right now as we speak, and companies do raise lots of money now. In terms of STOs, it's a new thing, and obviously the problems that I have with STOs, I'm just afraid that it'll become a new hype. So we had a hype around ICOs, and now we kind of say that, well, you are wrong, now we want to have a salvation, we want to do something else, we want to become better us, and let's do an STO, which is regulated to a certain degree, and we can raise more money. But just yesterday I had a conversation with a startup, and they raised quite a lot of money on ICO, around almost 100 million USD at the time, and all money is gone now. All money is gone, they spent it on something, and now they're looking to raise a STO. So I said, now I'm talking to investors like, well, yeah, we raised the ICO, but now we really need this STO round, so to push our product. And the thing is, I asked, okay, so you had $80 million. What is your product? Can you tell me? And so, well, we have those 3 verticals that we are working on. I said, okay, 3 verticals, but what is your product? And there is no product. 80 million is gone.
My white paper, what do you mean?
No. I think the industry has moved on from there. You could have raised money by having an ID on a napkin. Now,
Absolutely not.
absolutely not.
No.
But the official numbers would completely back that
Having
statement.
a product and having a working product which is used in industry is 2 different things, okay?
So right now we have more projects which already have a working product, or at least a pilot in relative perspective, which you had in 2017 or 16 or in Q1 2017. That is a fact. You can't go out by just having a white paper and raise money. Investors have become a lot more intelligent in that respect. You're not going to get money. It's as simple as that.
Yes, but as been mentioned, is there an option? Do they have clients? Do they get revenues? That's the question. If the answer is yes, and obviously I agree with you, but if you're just building a prototype and having a pilot with no potential adoption or no market, then the answer is no, you're just pulling investors in a new way.
Yeah. So the adoption is creating partnerships. That is what it is, because that's where you get the partnerships.
I think that, to be honest, I think that the problem is about the people behind a lot of projects. I was just checking the coin market cap, and there are more than 3,700 of coin, the coin market cap. And most of these companies are made not from entrepreneurs, are made from maybe developers or just marketing guys that were able to write a very good white paper and raise money from people, from investors, from contributors. But now the problem is under the light that all of these companies are not able to release any kind of product. So they are going back to investors, try to find more money, but most of them are not entrepreneurs. And to create a great project, and doesn't mean only to create the right, or to have the idea about the technology, it's about the skills of being an entrepreneur. So you need to be able to manage people. Find money is just the first step, maybe, or the second step after you have created your project. But after finding money, you need to put everything in place. You need to execute your project. And I'm telling that because I'm not an investor from the blockchain. I've been an investor. I'm not an entrepreneur from the blockchain. I've been an entrepreneur for the last 15 years, and I became millionaire in the traditional market before raising money in an ICO. But most of the people that raised money during 2018 and 2017 were not entrepreneurs. Don't know how to manage companies, how to manage people, how to find the right people, how to find the market, how to sell a solution to the market. That's the main point. If you're creating a great project, a great product, but you're not able to sell the product to the market, it doesn't matter, it doesn't worth anything.
Absolutely, but obviously even classical venture model, there are many failures. Probably 9 out of 10 companies would fail. So I don't want you to think that it's going to be any different with STOs or with ICOs. I mean, companies will fail, and that's normal. But obviously, the reason why you raised the capital was different during the ICO phase. That's true.
So I think this is going to change a little bit, or I hope it's going to change when the institutional investors, the big institutional investors, are finally going to move into the crypto space. You already have, most family offices and VCs obviously investing in crypto, so endowment funds, now pension funds. So as the industry matures and you have analysts and you have risk managers, analyzing and doing proper due diligence on the security tokens, on these projects, the money is going to become smarter. At least I hope that it's going to be. So, and I'm hoping that this security token is going to be much different than the TOD token, that it's going to avoid the hype, and that you're going to have, real investors behind these new, better projects. So that's what I'm expecting to happen in the next year or two.
I'd love to concur with you about the hype. Unfortunately, that's already in play. If you have an STO written on it, people are ready to pull money. They're ready to give you money to an extent. A trend that I have seen in the market is that if you wanted to raise 50 million with a 50, now those particular entrepreneurs have scaled it down to 3 million or 5 million. Why? Because they wanted to show by raising very small capital and creating a pilot or a product which actually works is a lot more easy for them to do something. Why? Because now they have something which can actually create revenue. It has something, and then they can tokenize that. Once they can tokenize that product, then they can go on a full scale on that. So the second element of pension funds and a lot of other hedge funds, to an extent they are involved in one way or the other, that would improve the liquidity issue. But Robert, what do you think? Because right now, ETF that has been the talk for the last two quarters, right? And do you think that would give another kick to Bitcoin or the blockchain space in the Q1 of 2019?
What would give a kick? Sorry.
So approval of an ETF for a Bitcoin in a Q1, would that change the industry, bring some sort of a different sentiment that yes, adoption and regulators coming on board is something?
So I hope not, because I don't think, again, it's again a lot of short-term stuff, to use that word, to sort of reflect what are long-term gains, right? I mean, the world we're in now is nothing new. It's happened, let's go back to the internet era when there was a lot of, it's referred to pets.com and a lot of things, and again, it was gambling, same thing, right? It's nothing different. The reason people don't raise lots of money now is because they can't. That's the only reason. So if you can raise a lot of money, you will raise a lot of money. And in the day, people who shouldn't have been buying internet stocks, knew nothing about it, didn't read it, got an E-Trade account, thought everything was going to go up, and they were just gambling. And
Fidelity is offering Bitcoin now. Like Fidelity is offering custody.
Right.
I think everything is coming in that space.
Yeah, but that's fine. But the people, as long as the fundamentals are there and it's a good investment, then it's fine. But whether Bitcoin or something else will be, the winner in terms of one particular space, because crypto needs to be divided into many different areas, right? Bitcoin is a store of value, right? It's not supposed to be going up. No one's using Bitcoin because it was too volatile. You don't know whether to hold it, get rid of it. Certainly no one's buying coffee with it. And so, the various, and Ethereum is a completely different thing, but for your most investors or most retail investors, let's say that, they equate Ethereum and Bitcoin as the same because it's just a speculative asset, and I hope I buy it, and this crazy world and market that I don't understand is going to bid it up, and I'm going to make 10 times my money. The real crypto game, where I think there's going to be thousands and potentially tens of thousands currencies, will be related to the specific ecosystems of companies. The security token is a way to take, as someone said before, music or art and securitize that and fractionalize that so you can buy it. There's a real purpose to that security token. It's not just for investment purposes. It's purposeful so I can own a portion of something I otherwise wouldn't own. And other cryptocurrencies that are governing and fueling ecosystems are the same way. And they will be utility tokens, maybe they'll be investments. This all needs to play itself out. So I think, and I think what's going on now is good. The word cryptocurrency will sort of get redefined as to what it is, breaking it down into its different buckets. And if an ETF can help that, I'm not sure, because I think it's just adding more speculative fire to the game. So I think it really is just sort of back to basics, define terms so that all investors understand it and know what they're buying and can make an educated decision. And if you want to gamble short term, that's great. People do it. And if you want to make a long-term bet, here's the mechanism and the security with a small s to do that.
Yes, and also when we talk about gambling, we shouldn't be fooled that there are no rules. There are rules in gambling, and usually during the ICO we had no rules at all. So actually we have to work on the rules and define what would be the strategy for investors, for startups, for the next maybe hype, STOs, and we have to play by the rules, which is quite important as well. And obviously tokenization of assets would be one of the aspects that we should be expecting. That's the reason, for example, why we do STO for space projects.
So we're coming to the last 5 minutes because I wanted to open up the floor to the audience. I wanted to give them a good 10 minutes an opportunity to ask questions. Last final word, starting with you, please.
That's what?
Anything, any of your closing statements, anything that you'd like to say?
Yeah, I can promote my project. No, I think that one of the things that we can speak about is about the regulation. As I think is my main point, and we are working also with the European Commission to regulate this market and to use some kind of solution, a software solution to try to regulate this market, to identify people working with their wallet. Also, what we are doing with our wallet, we are all the people that would like to use ScribePay as our wallet need to pass through a KYC and KYB process. So if you are a company, you can have also a wallet for your company, and you can trade in crypto, identify your company, and use the statement from your wallet for your accounts. I know we are in this sector, so we are focusing on that. But I think that is another point to use to spread the adoption of the crypto. When all the companies, when the business can use the crypto to trade, to buy something, and to be paid to sell something, it's important. And you need also to regulate that, to create accounts on the crypto.
So my last word would be, I'm super excited about what's going on. Actually, I think there's amazing potential, amazing projects. I think any industry can basically not even be disrupted. I would say recreated, almost from the ground up. In terms of, so many different industries have been basically dominated by middlemen, which was really the promise of Bitcoin, which is why do I need the bank's approval to send you money and they take a fee for it. So I think there's, across the entire world, there's industries that are going to be recreated where middlemen will basically be removed and we can directly transact with each other, which will create new pockets of economy, and it will create the ability to get more wealth for everybody. And so I think that's what's exciting. I just think it needs to be done with prudence and patience. We're in the early days. We're like in 1994 of internet days, and it's going to take time. The winners will come in the next years, and so I think that's what I look at. It's investing in companies that are really building these incredible changes that are going to be manifested 10 years out.
Yes, I agree with that, and I believe that there are two things. First of all, as we're moving to a new models of fundraising, such as STOs, we have to understand this. It's not only that, but we also have to see how blockchain is helping to build new economic models. It's not just about creating new investment mechanisms, but actually utilizing blockchain for finding out in new ways how the economy, how we can trade with each other and create something new finally. That's very important. And secondly, we have to grow as a community in our expectations. I already have talked to a few people as they arrived at this conference, and everyone is expecting a second bull run. I mean, it's fine, nothing wrong with that, but I believe if you really don't want to make mistakes that we did during the ICOs, we have to grow and we have to understand why we are here and what is the short-term and long-term investment for us. It's very important.
What can I add to all of that? I want to go back to the basics and what we're talking about. We're talking about cryptocurrencies, which is basically, as someone here said, the store of value, and Robert said store of value, Bitcoin, and transaction, right? And then you have token, which has other properties. But going back to what money is and what its purpose is, right? And how it moves the world, and how people use it to trade, to make money, right? To work and so on. So how it's going to be changed by cryptocurrency? Who is the user of money right now? Like what kind of sellers are there right now. These corporations, these small mom and pop shops all over the world, if you look globally. So when people are asking what's going to be the next big cryptocurrency, is it going to be Bitcoin that's going to go global and it's going to go mainstream? So in my opinion, that cryptocurrency is going to be the one that will convince those basically trading authorities all over the world, these companies or farms in Africa or people bringing goods in India to use crypto as the means of trade. So I would be looking more going back to the roots of this tool of disintermediation and looking at trends and in order to see where which type of entity is going to win in the future.
Thank you. Thank you. So, okay, here we go.
Hi, thank you so much for sharing your opinions. Hearing your candid perspectives was really refreshing and interesting. So if we zoom out from the blockchain world and just try to look at the distributed ledger technology ecosystem in general, blockchain is competing with other technologies like that. We have interesting data structures like Tangle and Hashgraph, and then we also have something like Tempo, which is coming up. We don't really know much about it, but it is in the pipeline. Where do you see the blockchain space moving forward with all of these interesting innovations as well? We're talking about micropayments, we're talking about interesting properties like ABFT, which has never been done before. So where do you see that playing out?
Yes, if I can start. I mean, last year I was at the World Economic Forum. I go there every year, but last year was very different because we had quite a few blockchain startups there. Actually, it was a bit too much, but and the thing is, it was last year World Economic Forum was about global automation and new industrial revolution and kind of way of moving forwards. And automation, I believe, is a very important thing here because for automation you will need AI, blockchain, and many other technologies. And I see blockchain as a foundation, as a base for automation to happen, to allow new economic models, to allow new type of transactions, new type of relationship between different stakeholders, actors within the economy. And that's one of the things which is important for blockchain. And so for me, and I don't want to answer for everyone, it's one of the building blocks for the future automation, for a new industrial revolution to happen.
You can answer for me.
If I could add to that, blockchain, I would use a 4-step rule to evaluate whether a project needs blockchain or not. If some project comes to me and says we want to do blockchain, so number one, do you need a database? Yes, we do. Is this database used by many entities to add to it? Yes, you do. Do these entities have a reason not to trust each other? Yes, they do. And is there one specific centralized entity like the government or somebody everybody trusts who can manage it all? And then if the answer is no, then blockchain is a good solution that you can look at. Now, saying that, there are many areas in global industries that require data, that have databases where everybody adds to them, right? So I would be looking into that. I would be looking places with data. Now, saying the word data immediately brings AI to mind. So I would be looking at places where blockchain and AI take place. And then thirdly, I would be looking in industries where people who are, let's say, gambling or starting these companies and having obvious ideas don't go. So like places like supply chain is kind of becoming obvious now, but there are other things, like for example industrial safety, where you have lots of data, like environmental safety and projects, like I don't know, space exploration, who would have thought, like maybe oceans exploration, maybe natural resources exploration, places where you have lots of data and you have lots of entities, and people don't ordinarily go. So I would go and look there for future blockchain projects that are going to succeed.
Perfect answer. I wouldn't have any follow-up.
So, sorry, I have a question. So, this is specifically for Yair, because seeing a woman panelist in a tech conference is always inspiring. I just wanted to know more about your perspective in terms of, do you think there needs to be more diversity, obviously, in this space. Is there anything that's happening in the status quo that could change it so that there's more sort of unique voices and diverse perspectives? And just from personal experience, what do you think has really helped you thrive and do well in this space that you're in?
Thank you for the question. So I founded an organization called Women in Block, which you guys can join, and we have monthly events for women and men. So women have the mic first, and then everybody else. And I think that this space, not like any other space, is created by us. You know, if a woman wants to succeed, she will succeed. That's my belief. And I think that specifically in this space, there's a lot of opportunities for women because it's an emerging space. Everybody, the playing field is leveled. You can make yourself, you can just be genuinely yourself, your best professional, and people will open doors for you, not because you're a woman, but because it's an open field for everyone. So it's a good time for us, I would say. Thank you.
One more question, please.
Hi, it's James Casaprat from Malta. First of all, I really enjoyed this panel. Congratulations to all of you. I have I'll cheat by putting two questions in one, actually. But both are related to institutional investors coming into security tokens. What we're seeing, are you actually seeing institutional investors coming into security tokens? Because what we're seeing is absolutely the other way around. So we're working on a number of projects where institutional investors are interested, but they look at the project and the reaction is one of two. Either we're not interested, or if we're interested and we're coming in, forget tokens, screw tokens, we're big enough, we want equity. And we're going in with traditional equity, and we wouldn't even consider tokens. Security tokens make sense. I'm speaking obviously about going in at a private equity, not tokenizing art or whatever, the actual private equity space. When you've got a small investor acquiring a token or a number of tokens because that is within his or her reach. But until now, with really large institutional investors, we're not seeing them going into tokens. I don't know what your experience is, one. The second issue, big issue with tokens is liquidity, a secondary market, exchanges. We really need to see more security token exchanges. And until we do see large, reputable, accredited ones, I'm not seeing the space moving forward.
Okay, let me try to answer. For the first question, I think the answer is it depends from the project, because does the project need the blockchain or not? That's the first answer. Because if you need the blockchain, you can issue a security token, and in this way, the kind of investor that you are looking for or you are finding will get what you want to offer him. So if you are issuing a security token because your project needs the blockchain, the venture capital will have the security token and will keep the token or sell the token later, and that's it. About the exchanges for securities, I think it will come in the future, but we need to solve a lot of problems before about the regulation, where you can issue security tokens. For example, Malta is one of the places where you can, Gibraltar is another one, but there are not so many countries where you can issue security tokens. So before all, we need to solve the regulation problem, and after that, you can, when you have a transparent, a clear regulation about that, you will find also auto exchanges, because you will have a lot of securities to exchange. But in this moment, there is no reason why having exchanges for security, because there is no security tokens around. That's my point.
I'll give a non-nuanced answer for that. People bought tokens, so not everybody, let's say the vast majority of people bought tokens for mainly one reason. They thought they could make a quick win. You can define quick, but let's make sure it's less than 12 months for sure. A quick win, and by definition means that I could sell it on the exchange, the thing was going to go up, and I would get out. And the whole premise of the token was that it was liquid. That was why people preferred it. Equity, gotta wait, tokens I can get in and out, that's the whole game. And there's obviously interest for people for that. Now they go back to equity because that's what they understand. That's the more traditional way, and they saw a lot of lack of rules in the tokens and obviously what's going on now. So in its ideal form, what a token should be is ownership of an economy that's being built, which can be owned by many different stakeholders. It can be owned by contributors, it can be owned by people, it can be owned by investors, and each one has a different potential interest. And if investors are participating in order to provide the money, take risk, and be able to get their reward, and that reward is also measured in earlier liquidity, that's great, that's fine. But it can't be the entire game, where there's no one else participating and it's just the investors, because then you have what has happened. There were no real non-investor owners of these communities, because these communities weren't actually live yet. They weren't anything. So the time will come when these communities are active, when the people are contributing to it, they're receiving a token in return for contributing to it, and they will be alongside investors, and you'll have this balance of investors who have their role to play, short-term or not, and stakeholders of the token who want to hold it long-term and want to receive something for participating. And that balance needs to be met, and that balance will not be met in the next year. That balance will come with more maturity and with as these projects gain steam and gain adoption, because right now, as it was said, there are very few projects that are done. So I think that's where, and again, that's where HTO, STO, ICO, it's all just names that basically say, I want to get short-term win before the market's ready. So let's wait till the market's ready, get the right balance between investors and contributors, and then I think great things can happen.
I would look at the evolution of investors in this space. So, in the beginning there were people, there were gamblers that wanted to get quick wins. Later on, maybe a few accredited investors and Wall Street guys and girls came on board. And then you had people, let's say family offices came on board, the small family offices, large family offices, VCs, and then you had, say, endowment funds coming on boards, and now it's the time of the pension funds. However, it seems like the infrastructure is not ready, and that's why there's no investment from their end, because you need to have proper operations, risk management, you need to have custodian set up, and you need to have trained professionals that can evaluate these assets and trade them. So we're looking at a market that's developing, and when these infrastructures develop, then you will see pension funds and other institutional investors coming in with more force and possibly switching, or from equity back to the tokens beyond the hype. And on top of that, you mentioned the security token. Everybody's talking about the exchanges, and that's the last stage of security token evolution, because before you exchange them, you have to create them, you have to issue them, and you have to trade them. So there is some clear evolution in the space as well, in the regulatory space as well, with exchanges acquiring licenses. You mentioned Malta. That's one of the places where Binance is working with the local regulators and the stock exchange to facilitate the security token exchange. And Coinbase has acquired a few companies in the traditional financial space that are expected to get those licenses, the traditional financial broker dealer and so on. So I think that we're just basically waiting for these pieces of the puzzle to come together so that the institutionals can trade.
Thank you. That's all for today. I think, to answer very few, in 2019 perhaps we're going to see a more clarity on the regulation, and it will be more on the side of STO. I don't think ICOs are completely dead, what we are reading from the industry. When I started this process of whether I wanted to do a PhD or not, I did extensive 3 months of research just on the topic, is blockchain something worth for me to do it? Because in the next 3 years, this process could be all dead, and it's such a fast-moving industry. Within a month, you'd see like new scalability issues coming up, new products coming in, but nothing is there to which you can put your finger and quantify that this has actually worked. But the future is bright. That was my conclusion. It's an area for research, and whoever has done it, he would present a fraction of a fraction in that space who would have that knowledge. But I thank you for the esteemed panel that we have and for the time that they've taken out to come this far and share their knowledge and wealth. Thanks ever so much for coming, and thank you for you guys for